welcome to the Closing Beat, everybody. Happy Monday. Hope you had a good weekend. It was a long one, man. Why are weekends got to be so long? I like being here. Anyways, this is the Closing Beat. It's a show that we do every day to just go over the stock market, the good, the bad, and the ugly. We'll cover all of it. Now, it's the month of February. If you're one of our customers, we did a whole overview on the month of February, what to expect. Is it one of the bigger months? Is it one of the quieter months? I won't give away the secret, but you guys know what to expect. If you've never been a part of the markets before, or you're just sort of learning and getting interested in it, awesome. Hopefully you found a new home here where we can talk about stuff. We're financial advisors here with Jazz Wealth Managers because the shirt says so. We manage long-term investments. We have our own portfolios. We build and manage them sort of like mutual funds, but we don't offer them to anybody besides our customers. So they're our own funds. They're all listed right on our website. And occasionally, if we talk about a stock that happens to be in there, I will let you know. Let's get started. So if you look off to your right-hand side, I believe that would be your right. You got the stock markets today. The Dow down about 53, not really a big deal there. The S&P and the Nasdaq basically closed at the exact same price that they did. I'm like point wise and everything. The Nasdaq on Friday closed like 8.83 points higher. The S&P closed like 1.9 points higher. So really was that close. Like nothing really happened. And to illustrate that on the chart down below, you've got a white chart of the S&P 500 where every blip is 5 minutes. There's a red dashed line right across there. It's this chart over here. Over here. And you could see we basically finished right at about that red dashed line, which just lets you know we finished basically where we closed on Friday. So that's the overall markets there. Well, let's dive in here. The markets basically finished where they were. We'll go over to the sector. Well, let's take a look at the indices here. I always like to go over the individual indices. Why were the markets sort of chopping back and forth? I'll leave it up to my cute little graph here that I've illustrated where this gray boxy area represents no man's land. Go back to last week. We illustrated why this means this is no man's land. So any price movement inside of here really isn't going to attract any bulls or bears, right? We're not going to scare anybody out of positions, and we're not going to attract any new buyers. Anything over or below this gray box area should spark a new round of excitement. And then if we do happen to move higher, here's the next area where everybody's going to be looking at here. I just sort of made it visual. I don't know if that's interesting or not. For the Nasdaq, we've got the same scenario. However, I didn't really outline it. In no man's land here until we get above the red line, which is a 200-day moving average, or really down back under this green line, which is the 20-day moving average. That would, I think, spark a little excitement to the downside. And the Dow, just going to be a little bit messy here with the trade thing going on with China. Supposedly we're sending people over there, Treasury Secretary, I don't know, I put it down below in the news streamer there, but because there's a lot of those names that participate, have a lot of exposure to China in the Dow, of course, because they're large companies, you will see a little bit of back and forth there. So that's the individual indices today. I want to point out the Russell 2000, if you're paying attention, that one was strong. Almost 1% on the day, 0.8% gain on the day, headed back to these highs. So if you wanted to look for sort of signs of strength out there, it's all in the small cap names, so they look pretty good there. The dollar is kind of frustrating investors in general. So look what happened here. The dollar broke down under this downtrend. It's a technical breakdown. People look for confirmation of that breakdown. When it tries to rally back above it, can't, and then sells off. I even pointed it out on the day that it sold off. You technical traders go, cool, the coast is clear, we expect a pullback, and the dollar just came swooping back and traded back higher anyways. So you got the bulls confused and you got the bears confused on the dollar, US dollar, and that's kind of juggering up some of the different areas of the market. I think that'll resolve itself here soon. Oil, we've been talking a lot about oil being in its comfort zone, and by comfort zone, I don't mean to oversimplify this. You can just kind of tell where everybody wants to play along. It's right here, 52 to 54-ish. I'll just kind of leave it like this. You got a little gray box in there to kind of show you. That's where a lot of trading is taking place, but no real major decisions. You got, picture a tug of war. You got an even tug of war. The bulls and the bears are fighting it out, and right now no one side is winning. I happen to think it leans a little to the weaker side, given the fact that the sort of uptrend since Christmas time hasn't really been able to continue. If you look a little deeper, the oil-related areas of the market, your oil service stocks, they had a good day today. That was your best performer there. Oil explorers, they were up today. A little interesting note, we're building a market dashboard inside the dojo. So you'll be able to go watch videos in there of all the classes we've ever done privately for customers. But we're also building out like a homepage with the markets information, everything I usually cover, the indices, the sectors, the chart right in the middle. Oh, brother. And this is one of them. That was what got me off track. The Oil Explorers, XOP is the symbol I'm looking at here. And then transports. I want to point out transports. They started the day a bit mixed. It was a little bit higher, then a little bit lower, then a little bit higher. I mean, always positive on the day, but just kind of wiggling back and forth there. Towards the middle of the day, you saw a little rally in transports. That one stood out today. Looks like it's headed back to its 200-day moving average. And regional banks added 1% on the day, when the overall banking sector, the broad base, the XLF, they just were just a touch, 1/3% up higher for that one there. Really, to me, the standout today, if you're paying attention, is transports, sector-wise. I don't know, I just kind of caught my eye as being sort of strong all day, and every time it tried to sell off, it was pulled back higher there, so not bad there. Sector-wise, you got healthcare pulling back a little bit there. A lot of the healthcare names, especially in the Dow, those were your losers today. So the UNH in the Dow, United Healthcare is a Dow stock, pulling back to the 200-day moving average. I can't remember the other, but just know that healthcare is pulling back a little bit. And utility stocks, a little bit extended to the short term. They seem to want to pull back a little today. That's really all I have sector-wise. Let's talk about stocks. Tesla is going to be in the news today. They were upgraded by Canaccord, and it was kind of an interesting upgrade. They moved their target to $450, which, as you can see here, is off the charts, well off the charts. And they think it's going there in the next 12 months, $450. They previously had a price target here of $3.30, which means they think there's over a 40+%, what was that, like 45% upside potential in the next 12 months. That grabs some attention, right? Because that's saying a lot. You think it's going to break out of this entire range and head to 450. So they got a little attention. Also, in Las Vegas, one of their vehicle delivery centers, they cut 150 workers. I think they only had 250 workers there. So it was a big cut in their workforce, and some of the employees were rather frustrated and were commenting to Bloomberg or Barron's, maybe it was Barron's over the weekend, that this is the first sign of weaker deliveries to come, because the Las Vegas location was a delivery center, from what I understand. Anyways, that's Tesla. We covered it. What's next? Restaurant brands. We actually own this one in our aggressive stock fund. So if you're one of our customers, you've probably been noticing this one pull you a little bit higher lately. It's a good thing. Another 1.5% gain on the day. They reported earnings, better than expected sales. Really, their comp store sales, if you follow along there, at Burger King and Tim Hortons. So if you don't know, Restaurant Brands owns Burger King, Tim Hortons, and Popeyes. So they own those three restaurants there. And Burger King and Tim Hortons going well. Sales beat across the board there for those two restaurants. They got new leadership there, by the way, at Burger King, sort of just change. It's like swapping out a quarterback for another one. That's essentially what they did there. That's the short story of all of it. So good news if you have that in your account here with us at Jazz. Also, they raised their dividend to 50 cents, so that now yields 3.19% on a forward basis there. So very nice, like that one there. So looking good. One more, just to get one more little marketing plug in there for you. Salesforce, this one's also in our aggressive stock fund. They had a really cool addition to their platform in the health services sector to improve patient experiences, improve overall outcome, and the stock also was able to pop up to this high right here. So on the day, it was able to get to new highs, added about 2% on the day, and I believe that's about 20% this year so far. Let's just get it right. Let's get it right. So we'll go back to the beginning of the year. It's about 20. Yep, that's about 20% on the year so far at its high for today. All right, it seems like some of you are asking about Activision. I don't blame you. Activision broke down to new lows today, 7.5% on the downside there. It's not an official announcement. It was a report, I believe out of Bloomberg, where they said that the company was going to cut hundreds of jobs. They got slowing sales overall. I don't know if it was an actual comment or if it was just a report. Bloomberg has a habit of really grabbing your attention there. Nonetheless, the stock was down by 7%. That's a fresh technical breakdown, although you'll see little backs and forths along the way, sure looks weak here in the short term. There's not much else good to say about that at the moment. Games in general a little bit weaker on the day as well. Take two, TTWO lower by 3, almost let's call it 4%, and EA started off really strong, gave back a lot of that. Just gaming. Okay, in the pot stock area today, you got Tilray down 5%. You got Aurora Cannabis, they were down 5.5%. I believe they were the ones in the news. Canopy Growth down 5.5%. All of them as a whole, pretty brutal little one-day pullback there. Speaking of pot, not related anything to pot actually. Avis Budget, so they own both brands in there. The ticker symbol is CAR. Stock price $27.58. You can see on the chart there, very, very, very much depreciated, on sale, discounted, if you will. Goldman Sachs came out today. They upgraded the stock and they said, hey, if you like bottom fishing, this is an attractive valuation for this stock at these levels. They like the $27, $26 area, so it's their recommendation that you buy the stock, not mine. Speaking of other stocks, what do we got left here? Oh, Coke and Pepsi, they're going to report earnings later this week. So those will be interesting when they come out. We own both of those in our dividend fund. And then I thought I'd finish up with some technical patterns, right? Not recommendations to buy or sell or anything, just technical patterns here. EXPE, we've been recommending, oh boy, oh, I didn't say recommended. EXPE, somebody had asked about this the other day, and I suggested that maybe there was a chance you get a better price if you just let it pull back. It pulled back today. I think you continue to be patient there and let it pull back if you're interested in that stock. Celgene, that's a very popular technical pattern there on the charts. Lots of room overhead should that continue higher. Know what you're looking at there. It kind of looks like anything over the $92 area really grabs attention by the bulls, so just giving you a heads up on that for your short-term traders. Holly Frontier kind of looks a little weak in the short term here. These guys are in the oil space. This one just sort of looks like it's rolling over. Just a guess. I don't know. I just thought I'd test out something different on you guys, so we'll follow along with some of these things. What else do we got here? If you have any questions, I'm happy to answer the questions for you, but just know where we're at. What do you call it? News buzz-wise or sort of distracting news-wise. You've got the government shutdown this Friday. If they don't work out something, they're working. You hear little rumblings of things that they're working on. So you got that. And then you have the trade war. March 1st deadline on that one for some of those tariffs not to double. It feels like what they're going to do here is come up with some big plan where they work out some of the details now, extend the deadline. There's no way they have this all solved by March 1st, in my opinion. Aurora is reporting tonight. Okay, cool. I don't think it's out yet. Nothing popped up on my end, but good. 13 Fs. Those are at the end, just after the end of the quarters, I believe. Yep. For Warren Buffett. You want to see what Warren Buffett's been buying since October? I don't blame you. Okay. Roku, yeah, that was actually one of analysts' big pick for the 2019. So far, he's looking pretty good. It was the top pick, I believe not Raymond James. I don't think they would do that. I forget who it was, Morgan Stanley or somebody. It was their top pick, Roku, and so far looks good. Add to that the pullbacks over the last couple days, let's just show it. If you can look at the charts here, these pullbacks, these are telling you something. Right? If you're a short-term trader, it's not magic or anything crazy. This is just showing you that there are sellers that tried to push this lower and the buyers won the battle. Right? So if you're one of our customers, in the dojo is the candlesticks class. There's 3 of them. Goes beginner and all the way through intermediate. But there's 3 classes that cover this sort of look right here, just to give you an idea of what you're looking at. So to me, that sticks out as something, hey, they're barring any major market sell-off in the next couple days, that one seems like it's trying to keep the momentum alive. Yeah. Why would you pick Coke as one of your dividend-paying stocks? Company is buried in debt. Well, we'll cover that then. The goal of each fund that we have is not necessarily because we like a stock, right? We don't do the stock picking game. Each fund that we have has an objective, and we'll do whatever it takes to meet that objective. As things change, and they're always changing, then we'll adjust those funds for sure to make more sense. But I think you got Coke coming out before Pepsi. Am I wrong on the earnings? I don't have my normal sheet today. No. So Coke is on the 14th. Pepsi is on the 15th. No, yeah, Coke is coming out before Pepsi. So we'll talk about that one later in the week for sure. Yeah, there you go. We'll see. Do a video on in-kind transfer for an old 401k account. It's getting better. It's getting better. We do a lot of 401k rollovers here, and for the most part, it's not an in-kind transfer. They just shy away from that. For the most part, 401k companies are trying to stay away from liability. And so what happens, to just make it a really short story, they won't even send the next, a lot of times they won't send the next company the funds, the account, whatever. They'll just sort of wrap it up, say, here's a check, send it to you, and then you're responsible to forward it on. It's changing. It's a slow progress here in the industry, but it's changing. Yep. Cool. You guys are going to bet on the which one Amazon's going to buy? FedEx or UPS? I don't think they have to. They don't have to. We'll see. What do we got? I think I covered everything there. I'll wrap it up. Yeah, back to work for me. I hope you enjoyed. If you did, hit the subscribe button. This is just sort of a rough draft of what things look like. We'll be back tomorrow, of course. And hey, thanks. We'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.